From AAAFx, this is Chris taking a look at the Bitcoin market. You can see another day we really haven't gone anywhere. Now, before I get into Bitcoin, I do want to take a glance over here at Ethereum. You can see how the action is over here. It's much different. And this is the weekly chart. Typically, one will lead the other. So keep that in mind as I look at Bitcoin, because most of the time it'll be Bitcoin that leads Ethereum, but sometimes it does switch. When I go to the weekly chart, you can see the Bitcoin is struggling at 52,000. Not a huge surprise. I mean, we've been straight up in the air since this pullback after the ETF announcement, and we have gained 37%. It's ridiculous to gain that in a month. And now I think people are starting to digest this. So, I had somebody email me the other day, what do? I desperately want to get into Bitcoin, blah, 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 blah. And, it doesn't seem to pull back. But here's the thing, it's going to. It has to. It's a matter of being patient. Do you want to buy the new object, if you, whatever it would be, say a computer. If you want to buy a computer, it's $1,800. But if you just wait 2 weeks, you can get it for $1,400. Unless it's a dire emergency and nobody's buying Bitcoin out of an emergency, then the smart money waits 2 weeks. It's a matter of impulsivity and trying to guard against it. So you can see I have this little area here at 47,500, and I think we will more likely than not find buyers there. Do we get the pullback to there? I don't know, but that's really what you need to see. I mean, that's a roughly $5,000 drop. So it's, round dirty math, 10-ish% discount. And that makes a huge difference in your returns. So keep that in mind. The fact that we're slowing down here doesn't truly surprise me much. It's just a function of a market that got overextended. It's still very bullish, but I will warn you about this. We now have a spot ETF, and that means that institutional traders will drive the price of this up and hand those ETF shares off to retail traders who will then get left holding the bag. That's the playbook of everything Wall Street does. So do be aware of that. This isn't going to be behaving like the retail market of the last 15 years. There's real money in it now, and therefore it's going to be manipulated. It's going to be ran up and ran back down. It's going to be traded with high frequency trading, like in a much larger scale. So it is probably going to behave more, honestly, probably more like the NASDAQ 100. So keep that in mind. And the two do have a pretty high correlation over time. So that's also something worth paying attention to. Again, though, I want to see it pull back here so I can take advantage of value. I don't want to chase it and then have to sit on a $5,200 loss, for example, waiting for it to turn back around. It just doesn't make any sense.